XRP commentator Zach Rector just dropped a stunning analysis suggesting that XRP ETFs could potentially add up to $1 trillion to XRP's market capitalization following their launch. With the Canary Capital XRP ETF officially approved and several other XRP ETFs expected this month, Rector outlines two compelling scenarios that could fundamentally reshape XRP's valuation. In his base case scenario, Rector projects that XRP could gain roughly $500 billion in market value, pushing its price into the $10 to $11 range. However, his bullish scenario is even more dramatic, projecting a full $1 trillion in market cap growth that would lift XRP toward $19 or $20 per token. Importantly, he clarifies that these estimates only account for ETF inflows and don't include additional demand from XRP's growing utility in global payments and liquidity solutions. But here's what makes Rector's analysis particularly compelling. He points to the powerful multiplier effect we witnessed with Bitcoin ETFs, where $62 billion in ETF inflows created a massive $1.76 trillion increase in Bitcoin's market cap, representing an incredible 28x multiplier. Rector believes XRP could see an even larger multiplier ranging from 100x to 200x due to its smaller market size and greater price flexibility compared to Bitcoin. Therefore, Rector expects between $5 and $10 billion in XRP ETF inflows within the first year, potentially arriving even faster within the first month. This aligns with projections from Canary Capital CEO Stephen McClurg. Using his multiplier analysis, Rector calculates that $5 to $10 billion in inflows could realistically add $500 billion to $1 trillion in value to XRP's market cap. However, we need to maintain critical perspective here. Rector himself emphasizes that there are no guarantees, pointing to Ethereum's more modest ETF performance as a cautionary example. When Ethereum ETFs launched, they generated $13 billion in net flows, but only increased Ethereum's market cap by $13 billion over a year. Essentially a 1-to-1 ratio rather than the dramatic multiplier we saw with Bitcoin. The key insight is that while XRP ETFs represent a massive potential catalyst, the actual impact will depend on market dynamics and investor sentiment. The combination of regulated institutional access through ETFs and XRP's growing utility in real-world payments creates a compelling narrative, but investors should maintain realistic expectations about both the potential upside and the possibility of more modest results similar to what we've seen with Ethereum ETFs.